Let's get some ISMs, jolts, and more with Rick Santelli. Hey again, Rick.
Yes, there are such significant big numbers here. Jolts, job opening labor turnover, always 2 months in arrears. We're expecting a number close to 8.7 million, much lighter, 8,488,000. That is the smallest jolts number going back to February of 21. February of 21. And last month was revised just a smidge higher from 8.756 million up to 8.8 and change. If we look at the construction spending number, construction spending was down 0.2. We're expecting a number that was up 0.3. So that means now that last month, which was down 0.3, becomes unchanged. So now we've taken some back and given some with respect to the revision. If we look at the ISM manufacturing numbers hitting, I do want to point out the S&P moved back up to 50 right at the expansion contraction line. On the ISM manufacturing April numbers, it moved the other way from 50 to 50.3, our last look, to 49.2, 49.2, the weakest since Feb, when it was 47.8. If we look at the prices paid component, 60.9, 60.9, that is hotter than expected, much hotter than 55.8, and very interesting on a Fed day to see, of course, that moving higher. 60.9 on prices paid would be the highest prices paid level since mid-22, June of 22. New orders, 49.1, dips back below 50. And finally, on the employment, considering it is Jobs Friday coming up, we're expecting a number a bit higher than 48, a little bit better than expected, 48.6. It's higher than the 47.4 in the rearview mirror, but it does mean we have 7 in a row below 50 in contraction territory, which is very interesting. We did see a little bit of a pop in interest rates when we saw the numbers hit the wire, but it has eased back a bit. We're pretty much down 4 basis points on 2s, down 4 basis points on 10s, where we've been hovering off and on for the last 40 minutes.